asks of the industry on international tax from the budget. Now we are coming, from the fact that we are looking at a lot of expectations coming in, as such, because expectations are built up over time. But I will break it up into basically three parts. The first part, if you look at it, is more around giving some clarity on the irritants which have survived for a very, very long time in the income tax laws, at least for a couple of years now, and which are creating a bit of consternation in the international investor community. The first and the foremost relates to the issue around indirect transfers, and to give clarity around what should be the rules which the international investor community should look at when they look at making investments. So I think that is one very big on the agenda. I think it will send out the right kind of information and right kind of messages out to the international investor community, say that mean business to really get them into the country. The second, which I think on a theme, is basically to see how we can reduce the life cycle of controversy on international tax matters. And government did a little bit of an announcement in the pre-budget, in the budget, which happened just immediately after the new government came into, and started, gave the first budget. And in that one, they actually made a lot of announcements around how they're going to expand the capacity on the AR. Also look at relaxing the APAs, look at the rollback on the APAs. Unfortunately, we have not seen as yet any action on ground in terms of things really happening to, again, give the confidence back to the investor community that they are going to see a shorter life cycle of controversy. There are probably lesser number of controversies, but at the same time, where there's controversy, there's shorter life cycle in terms of getting from controversy to clarity. That is the second piece. And the third, if you look at it, is more in the context of the whole theme of Make in India. And I think if India really is very serious about making sure that investor comes into the India and make the investments here, you need to get a lot of clarity around some of the things which got changed in the past. And I'll give you one example is around royalties. So we had the rate of withholding tax and royalties, which was taken all the way up to 25% from a 10%. And this, I believe, is not really, in the manner of speaking, which will help investors to really bring their technology into the country and be able to sustain a very high withholding tax for technology which will be used for making this stuff in India. So I think really to give the impetus on manufacturing, we will have to see how some of these rules are again rationalized. At the same time, a lot of incentives need to be brought in, particularly clarity around MAT on SEZs. And if you really need to make manufacturing work in India, we need to really get MAT out of the way. So I think these are the areas on which we will have to see how things can really improve. So these three themes, if the government can focus on, could really help and maybe give the investor community and the international tax community on the investor side really the confidence that this is the country in which they want to make their bets and really take things forward.